Hi everyone, welcome back to this weekly market update. As usual, we shall see what happened on last week, what's happening to the market, and then on the coming week, and things to watch out, as well as to recap what have we been talking about last week's video. Those kind of chart and counters that we have been looking into it. How does the performance? And also one of the things to share is that one of the counter which I mentioned in my Telegram group. If you have joined in, if you are registered. No, join on my Telegram group. You should see that I have shared one of the um, trade setup, which is your charge point. This counter, which I mentioned on last week, why we will be looking at it. We'll review at this counter as well. So let's see what happened on last week. We can see that S&P 500, Nasdaq, everything actually go higher on last Friday itself. Mainly it's because of Amazon. This counter is actually helped on Nasdaq because of the earnings report, right? As you can see that they are performing very well on the earnings itself, even though Facebook has a huge gap down, even though their cutout certain of counters actually have jumped down, but Amazon, Snap, Pinterest, everything has rose. But do take note, out of these three, right, Amazon is still the strongest. Even though Snap, it seems like rose 58.8%, Pinterest rose 11.2%. When you go into the chart itself, right, you can see that it's because they have been beaten down badly previously. That's why when it jump, right, just a certain jump, right, is considered very huge percentage of jump. So don't be fooled by the percentage jump. You have to go into the chart and see lah. Of course, the earnings for Snap is good. After all, the mother company, which is Facebook, is not doing well, but the subsidiary is doing well, right? So it's kind of like amazing. And for Snap itself, due to the earning, right, we'll look at a competitor like Twtr and see how it performs because there will be the earnings reports for the coming week for Twtr itself. Not only that, we'll be looking at the 10-year use Treasury US as well. It jumped above 1.9%, which I chart previously back then my video saying on once it break above 1.744%, it will go to 1.9 level. We will look at the chart later as well. So last Friday, not only all this movement, we can see that the major things is due to the jobs reports on the January itself. It actually surprisingly powerful gain of 467,000, whereby the Wall Street estimate on 150,000. All right, due to this, right, it actually boosts up the market confidence, and also mainly, right, we can see that the posted big number is on the leisure and hospitality services, retails, business and services, and retails on the number itself. So we can see that even though the COVID have been raising Omicrons, but like I say, right, we have to move on. The market have to move on. People will start to travel, start to living out their house, start to gather, party. Yes, they will neglect all these risks of Omicrons because they need to entertain, right? They need the entertainment. So that's why the numbers actually on the hiring itself is go to leisure itself. So that's why oil has been searching higher because aviation, right? Cruise, this kind of sectors, you should actually pay more attention into it, while there's chances for it to buy in at a low price. All right, so this is what happened on last Friday itself. Of course, you guys can, Google more if you are really wanted to go in depth of the job itself. But for me, it's just on the head title because I want to see how does it perform based on monthly basis, right? All right, so this is what happened on last week. So coming week, in a week ahead, flash inflation's data, um, because whether Fed could be more aggressive about raising the interest rate or not with this good uh, non-farm payroll on last Friday itself. And not only that, the consumer price index reported on Thursday as a headline number is expected 7.2%. All right, so since 1982, the hottest number since 1982. All right, so this will actually let us know where does the inflation stand on, because we know that if the inflation keep going higher, Fed have to come in to raise the interest rate to stabilize the inflation, right? So, but when they raise the interest rate too quickly, it will actually um, change the sentiment of the stock market itself. All right, so it's a uh, so-called uh, against each another. All right, so we shall see what happened on next week on their reports. Next, not only that, is on earnings. We will be looking into consider on Pfizer as well. like I say, Pfizer, Twitter, either mention here, you just mention the big company, right? But there's a lot you can go and find the earnings reports from different websites as well. But Pfizer is in focus is because we know that the vaccine, right, is coming from one of them is actually Pfizer. So a lot of people is paying attention on them as well. So let's take a look at one of the new counter, Pelotons. This is actually one of the stocks that have been heavily bearish, have been heavily whacking on it. All right, and then it so badly performs, all right, until I think the shareholder or the investor actually urged the company board to put it up on sales. All right, so that is why there's a lot of interest buyer like Amazon, Nike, this kind of different company wanted to purchase over this counter itself. And that is why, right, for Pelotons, right, on last Friday itself, right, after the market, it actually surged 30% to $31. But it surged 30% doesn't mean the boat has left. Lah. Ultimately, we can look back in the chart, is because, like I say, it have been coming down, all right, dropping crazily over the past few months. It's chance for you to enter, but do take note, Amazon buy over doesn't mean the company will have good performance in the next quarter. Correct or not? It's just that it's a hype that wow, there is a big brother looking after this counter itself. Alright, so still need to do your due diligence whether you want to purchase into this counter or not. We'll be looking at the chart later. Alright, so lastly, let's come back to our chart. Go into individual index, go into individual counter. So hopefully you guys learn as well as benefit from this video as well. So if you have no time to watch this video, then you can sometimes just go to join my Telegram group. Then hopefully you can pick up something. This is usually shared uh, in the private Telegram group. All right, in the private Telegram group. But sometimes I think it's a good opportunity. So I will just share in the public Telegram group. Hopefully some people are benefited from here, and then you guys can actually join me on my private Telegram group as well. All right, so going to the chart itself for DJI, which I mentioned, as you can see that I purposely written the date 30th of January, which I mentioned on my last video. If you didn't watch my last video, you might miss this opportunity. All right, we started from this candlestick kickoff on Monday itself because we go by weekly basis, right? The market actually performed high, and I mentioned that it's trading between 33,000 to 35.4 thousand, which is here, 35.4 thousand, which is this line, all right, which is this line, which I circled at this yellow. I didn't even redraw this chart, which I draw on last week. All right, I just open up, recap where does the market flow. All right, it hit here, and then right now it come down. Right now it's still trading within these two range. It hit, closed, but it came down, right? So right now, the market has been trading between the moving average has been resisted by the 20 days, 40 days, 100 days moving average. Sorry, supported by 100 days, right? Supported by 100 days, 200 days, supported by 200 days, but being resisted by 40 days and 100-day moving average. All right, so it's in between the range, like I said. All right, so we want to see a new high. Definitely, you need to break above all the moving average, right? Even for the 40 days and 100 days. Otherwise, the market will still be sideways. All right, still will be trading sideways. So this is for previous week, and what happened for this coming week? We are still looking at this week. Right, trading sideways, correct? So this is what we are looking for this coming week. That's all for DJI. So let's take a look at 10-year. All right, US 10-year U rate. Okay, this is what I did previously. All right, let's see. All right, this is what I did previously. April, March, July, I returned, and on 10 October, I said, right, 10 October is somewhere 2021. It's somewhere here. All right, somewhere here. Okay, I say price has been supported by 50% Fibonacci level. All right, there's one big Fibonacci level. Where is it? Where is it? Fibonacci. Okay, so here. All right, supported, go up, supported. All right, and go up. So I say that once it break and close above the recent high 1.774, October here, close above this 1.774, which is the all-time high, we might see higher 1.9. So people who are still monitoring on U rate, right, actually is more on the upside lah. All right, it's more on the upside. Where are we looking next? It's actually, by right, it closed a very near distance at 1.95 something. So this is the weekly candlestick. So next week, right, or the coming week, we are looking at the next level, which is very near to this level. Right, it's around 2.1%. I think that it might actually be resisted by this major descending, all right, descending channel, descending, not channel, descending line. Okay, well supported, resisted, came down. So here might be have one resistance again, resistance over here again. All right, this blue line. So we are looking at around 2.1%, and we see where it goes next. All right, high of the interest rate, you will go up. Okay, take note on that. Next, okay, so how does this relate to market lah? I mean, when you go up, right, people will actually put the money into the bonds itself, to have more, safe adverse, interest earnings than risking into the stock market. Correct? I mean, having 2%, why not? Per annum having 2%, why not? Correct? Not coupon rate. So this is why when you go up, market should come down. All right. Next, we will be looking into certain counter, CHPT, which I mentioned on my Telegram group. All right. So CHPT, which I mentioned, long price, market or below. This is post on Friday, 11:14 p.m. Singapore time. All right. So so this is the candlestick on last Friday. I say below $13, right? It eventually did lah. The lowest point is actually on the 12.47. I pick it up. Of course, we can see that it's an anti-trend. Firstly, it's an anti-trend. I pick it up because on 30 Jan I mentioned JP Morgan upgrade them to overweight, target $20, and I put my cut loss at $10. All right, it's before the surge lah. It's before the surge in not 19 now, why so far? Before the surge in September 20. All right, so that is my stop loss. One is break below. I'm not going to view this counter anymore. All right, of course, like I mentioned previously in my video, we are in the interest rate high environment. Try to buy into the company which have post solid earnings, not forecast earnings. Charge point has not a strong earnings yet, but ultimately I just buy in due to EV, right? Due to EV, we know that they need to charge, and ChargePoint is, I think, is the biggest uh company in this industry, not in EV industry, but in the charge, the how do I say? I mean, just go read up like what is this company doing like. It's basically the pump for the EV itself like. It's the biggest company among the rest of the peers lah. So that's why I choose them, and due to JP Morgan upgraded them as well. All right, so next counter we'll be looking into recap. So what happened to Facebook? So you see, all right, it gap down. All right, there it come down again. Correct. So for people who actually purchase here, right, gap 26% is very painful. Please do not pick the falling knife. Yes, it might rebound, but do take note why I say that. I just bring back your memory 2 to 3 years ago, 1988. Oh, it's 4 years ago. All right, 4 years ago, we also have a bad earnings for Facebook. Can you see? All tip top, jump down. And when it jumped down, yes, you have decent pullback. So what happened? It continued to go down for the next half a year. All right, since July to December, continue to go down for the next half of year. I mean, if this have to play and then continue to come back lah, correct? Eventually even higher. For investor, yes, you can pick it up right now at first charge. When they go down, next half year you can pick it up. So I can just mirror image is somehow similar to here. But when we are looking at weekly chart, we can see that once it touches, right? Okay, once it touches the 200-day moving average, 200-day moving average, it bounce back. Touches, it bounce back. Right now, we are very close to 200-day moving average. If you want to long at this point of time, I can't stop you. I mean, it's your own due diligence, right? You got to do your own due diligence. But I'm just trying to think of will this thing happen or not. That means there will be a spike. All right, there's a spike to kill all the stop loss. People who actually long previously to kill them off because it's very obvious it's a 200-day moving average. So if I want to long Facebook, I might want to wait for a more decent figure, maybe 210. All right, or maybe 220. Okay, so this is where I'm looking at. This is where I'm looking at for Facebook. I'm not going to buy now. I'm looking at here. All right, I'm looking for somewhere here where it can have more few candle. This is really candle. Okay, so I'm looking for somewhere here, form a new candle here. All right, and a well support at these two level before I go up, and then it will form something this area, like this area. It's still above 200 days area, but how many weeks it take? One, it come down. 1, 2, 3, 4, fourth week, one more month. Come down. 1, 2, 3, 4, 5, 6, 7, almost 2 months. Correct? So why is there a hurry to go into Facebook, even though it's gap 26%? If you want to nimble, but don't put your stop loss still near. All right, you can put your stop loss somewhere below because you're eyeing all the way. This is your benefit, right? And this is your stop loss. Why not? It's definitely more than 1:2. All right, so this is why I'm looking at the Facebook. Do not change into it, and we know that there is an earnings impact, all right, due to the earnings result. So don't be too hurry to go into Facebook itself. Okay, so surprisingly, the subsidiary company Snap is performing good. Earnings report is doing good. That's why it actually gap up. Can see I gap 50%, but previously it gap down, go down all the way. So it gap 50% doesn't mean we are at the top to gap up 50%, which is strong, showing a very even stronger company result. But no, it's just a consider just a rebound back, correct? They can rebound back. So 50% is good because fundamentally the earnings report is showing good. But will I long here? No. Definitely you need to wait for the pullback or cover the gap. Alright, so don't hurry go into it. Next counter, we will be looking into Twtr, which is the competitor, right? Like I say, something similar. Alright, the market also has been going down. This is what I draw previously, so just ignore. Alright, so if you want to play a part on the earnings report, take note lah. If you want to play a part of the earnings report, because earnings report you can see what happened to Facebook, right? It gap huge. All right, it might have chance it gap huge and your stop loss can't protect you. All right, but you can set at $30, $32 as your stop loss. Then you can just buy on it lah. But I will just say that avoid it before the earnings report because you never know. Just like PayPal, how does it perform? Another huge drop below 20 days. Can you see that? Another huge gap. Alright, it's not doing well. On the weekly chart, we see that breach below the 200-day moving average is very, very sour at this price. Alright, it's well supported at this level for PayPal. Alright, previous resistance, right now turn support. So 121, 120 cannot give way. Alright, if one give way, then we will see hallelujah in this counter. Alright, so cannot give way. But if technical perspective, right, what I can see that it seems like a flag forming, right? Okay, so just nice, this level is almost this level. So it might have some consolidation here before the next level decide. Okay, so I won't immediately go in. I will wait for a few more candlesticks before I make my decisions. After all, this is a picking a falling knife. Like I said previously in my video, we take months or years to go up. We take weeks to come down. All right, this is life. All right, this is life. Okay, because panic and fear. So let me see what else. All right, so the last counter, this counter is what they're going to buy, right? So just share with you guys. So can you see the stock is heavily whacking down all the way. Right now we are at the level where it's formed. Can you see very close. All right, 23rd September 19, we are very close to here. Of course, right now we are looking at weekly chart. Where we are looking at daily chart after market, it go to $31. Remember, due to the news, right? The buyer at this level, 30% upside. But is it a lot? Actually, no. The price from $100 drop to 24, jump to 30%. So what? Correct. So of course there is opportunity if you like Big Brother taking and look after them, right? Then you might want to long. $18 is your cutoff. Wait for the price to you turn back a bit. All right, there you long here. Okay, so this is what we look at for this counter. All right, this is falling line. There's a huge gap. Gap might be playing out. Okay, we never know, but always manage your risk. All right, always manage your risk. All right, so that's all for my this week weekly market update. Hopefully you guys enjoyed. Remember to share my Facebook page to then join my Telegram group. Hopefully you guys benefit from there as well. Thank you everyone. Wish you guys a good weekend. Bye bye.